the first time since February 2022, we were able to register a net foreign inflow of equity of 130 million. Compared to the previous quarter, we are seeing the quarter ending June, we again recorded 1.48 billion outflow, which, while an outflow, is much, much lower in terms of comparison with the previous quarter, which is March 2023, where we had an outflow of 19 billion Kenyan shillings. So effectively what we are seeing is, in terms of outlook, is that with the possibility that there could be a reversal in the search for yield because of this policy pronouncements, particularly monetary policy, we see a reversal of movement where foreign investors were searching for yield, and also with an appreciation that there have been a number of counters, particularly the blue chips, announcing good profits and paying out good dividends, coupled with an improvement in accessibility of foreign exchange, which was a concern for them in how long to take them to repatriate their profit and or capital gains, and just the general perception or the view that the equity market and the stocks trading on the Nairobi Securities Exchange have been hugely undervalued. I think they're seeing a prospect. Over and above that, especially with regard to the bond market, we have seen the introduction of the new Central Bank of Kenya CSD system, and what not known as the DAO, which has really tried to streamline and address some of the weaknesses, but particularly the manual processing of documents, issues of onboarding, where there are requirements of things such as a personal identification number, which have been eliminated. We feel that the gaps that made the foreign investors shy from participating fully in the government debt market, and you will recall government bonds are also capital markets instruments. So we've talked about equity. We see prospects also in the fixed income market, particularly government market. So there's reason to see some to be optimistic. If you leave out the secondary market, we've seen a substantial growth in the collective investment schemes. If you're talking about collective investment schemes in 2014, they were about 50 billion in terms of value, Kenya shillings, in assets under management. As of June, we were talking about 161 billion Kenya shillings, which effectively means that Kenyans or local participants, particularly retail, are finding a home in collective investment schemes. So they're effectively still participating in the capital markets, but through unit trusts. And perhaps that might be the next horizon in terms of growth of the capital markets in Kenya, where we are going to use old schemes like pension scheme, collective investment schemes, alternative investment funds, leveraging technology. I also need to add that around January 2019, we had participation of foreign investors of up to 80% in terms of market share of turnover. In our most recent report, we are talking about that figure declining to just over 40%. So, given that there's still activity, we are seeing domestic retail and institutional investors beginning to play their rightful role, so that even as there's been that exit and we are anticipating a return, the market has not been seriously affected because domestic investors have stepped in to be able to participate. So we'll be encouraging that in the new Capital Markets Authority strategy, to see how we can get more of retail investors through sensitization, through onboarding via mobile apps, like the Dosika app, which we have already introduced to border riders, for example, to be able to really to participate in the same. So all in all, market still not where it should be. Liquidity level still low. Market concentration by the top 5 companies still very high, which is a risk. But we are seeing prospects of improvement going into the next quarter. So, thank you. I'll start by saying that in the sidelines of COP27 in Egypt in November 2022, His Excellency the President of the Republic of Kenya, on the sidelines of the launch of the African Carbon Market Initiative, indicated that he had a vision of Kenya being, of carbon being the next significant export for the country. And that underscores the fact that we have that largest market share in Africa, as you said rightly, at 24%. And that was even made more a reality in the auction that took place, I think it was June 14th of 2023, where we had Saudi Arabian firms, around 16 of them, participate in the auction. And those included Saudi Airlines, Saudi Electric. We had Aramco, which is among the largest firms in the world currently. And all of them have a carbon footprint that they might want to offset by purchasing credits, whether it's in the oil sector, whether it's energy sector, and that's where we're talking about electric. We also had I think we had Dubai Islamic Bank participating in the same. So it just shows the potential for our market, because as we speak, we'll be very honest, it's quite fragmented. We have almost all the sectors in the economy with a carbon footprint, and there have been all sorts of authorities in terms of who should take charge, because we have recently seen the progression of the Kenya Climate Change Act, which talks about this being under the jurisdiction of the Ministry of Energy, Climate Change and Forestry. Then we also have a private members bills that is proposing for the establishment of a carbon credit and carbon benefits sharing or distribution authority. At the same time, we know that a lot of the who we would call carbon developers, carbon initiative of carbon project developers fall from very many other jurisdictions, Ministry of Agriculture and all that. So we are talking about the potential, given that currently it's a bit fragmented, and therefore there needs to be leadership around the same. So part of the recommendations that we are making as the authority, and again in appreciation that carbon financial instruments, whether it's in the form of carbon credits itself or carbon credit futures, fall within the jurisdiction of the capital markets, and we have a role to play. So first we need to do a deep dive in form of carbon assessment across the country, including counties, to be able to map all the stakeholders, what role they play, and how their roles can converge into making Kenya a carbon trading powerhouse, not only in Africa but in the whole world, going by the developments that I have just mentioned. So ultimately, after undertaking that assessment, which will include also determining the actual demand, the prospects for growth in carbon credits that we could potentially sell, that will inform the policy approach that we will take in terms of whether we are going voluntary carbon markets or compliance carbon markets. But ultimately, there will be a need for a window or a trading platform to conduct or to bring together the buyers of carbon credits and the sellers of the carbons through the carbon offsets. So that platform will require to be regulated. And CMA will be taking guidance from the International Organization of Securities Commission that has released discussion papers on voluntary carbon markets and compliance carbon markets, and given some guidance on how regulators should approach their oversight in order to be able to maximize the full potential of the same. If you look at the public offers listing and disclosure regulations, it also provides for what I would call the black check companies, SPACs, and that has been included. It also provides for EIPOs. So assuming we are targeting the youth to participate in IPOs through privatization, that might be an incentive to them. But I must add that we had, as an industry, also committed to match whatever was brought by the government through SOEs with the private sector issuers. And there's a joint caucus of chairpersons and CEOs of NSC, CMO, CBSC, and Kenya Association of Stockbrokers and Investment Banks, where every every fortnight they have identified at least 5 companies from the private sector whom they're engaging their senior management at CEO level for them to be able to come to the market. So there's been a very active and intentional action by the industry jointly at the highest level, chairpersons and CEOs, to engage so that at the point that the government will bring in new companies through divestiture, we'll be matching the same from the industry. First, we'll appreciate that Ethiopia is no exception. We previously supported Dar es Salaam Stock Exchange to be set up. We also were instrumental in the setup of the Rwanda capital markets under the auspices of the East African Common Market Protocol and as East African Securities Markets Regulators under EASRA. So that Ethiopia was no exception. We have been supporting them technically on the establishment not only of the regulator but even of the exchange itself. And I think it's a welcome move because we are getting opportunities across the continents. In the continent of Africa, more opportunities for those who want to finance development projects, which is normally achieved through the stock exchange or the capital markets. So we see an opportunity, as we have had with market intermediaries, especially stockbrokers, investment banks, who through a mutual recognition arrangement, or what we call passporting, are able to transact in the various markets, such as the Uganda Stock Exchange. You find a number of Kenyan brokers there. So we see an opportunity for, and even Rwanda, the same thing. You find a few Kenyan stockbrokers there. So there's an opportunity. We are very experienced in the area of structuring transactions IPOs, corporate bonds, all that. So we feel it's an opportunity for Kenyan intermediaries to be able to expand their footprints into the other capital markets, and in this case, Ethiopia. At the same time, we know that Kenya has engaged previously with Ethiopia at the point when it was still conceiving this idea of setting up our capital markets. And without that exchange, there was also a possibility that the privatizations of Ethiopian state-owned enterprises could have still have been achieved through that platform in Kenya, that's the stock exchange. But now that they are establishing their exchange, we see a significant opportunity for cross-listings. And we believe that should be mutual. We've seen Kenya cross-list. We've seen Uganda cross-list to Meme in the Nairobi Securities Exchange, Kenya Airways, East African Breweries, all that. So we see mutual benefit whereby we can have an arrangement whereby Ethiopian companies would be listed, cross-listed on both the Ethiopian Stock Exchange and the Nairobi Stock Exchange, and Nairobi Securities Exchange, and vice versa. So it's a win-win for both jurisdictions.